I made a stay application before the AO only. He sent me an order saying no stay is rejected, gave some reason, whatever, and ultimately says you are required to pay tax within 5 days of this order. Second day he attacks my bank account. I went back to him and said, even if I must comply with your order, how to do it? So 2 days we were talking. 5th day the RC ultimately decided I'll approach Commissioner. Commissioner said, no, your 5 days is over, I'll lift and attach again. You do what you like. If I will direct the AO to lift, but he will lift and attach, what will you do? That's all. So what is the point in even approaching the High Court? Even the High Court will say it was illegal. He will lift and then again. So this January-February tension will probably reduce, because once this March year end comes, they create a lot of difficulty for us. After March, for normally up to 6 months they sleep. September is when they wake up. Time barring time. So now it may extend also, because time barring is only March. So to that extent I am quite happy. Officers will also be happy. Officers also I won't blame, in the sense that they are also doing all this probably because they are under pressure. There is a chairman of the board who goes on record publicly saying that your promotion will depend on how much you collect. Whether the demand is enforceable or not, collect. Only then I will do it. Only then you will get promotion. I won't blame the officer down. The officer is under pressure from the commissioner is under pressure from the chief commissioner from the board, and the board from the ministry. So ultimately it all goes back there, that this is where the pressure stems from. So probably some intelligent bureaucrat, realizing that this is what it is, without even the finance minister knowing what he is amending, would have inserted this provision. This is what would have happened. This is my guess. So I am happy for the department also. That you have provisions relating to TDS. In fact, on TDS there are couple of amendments on the requirement to deduct tax. One is in 194J, where they have said any amount of remuneration or commission by whatever name called paid to a director on which tax is not deductible under 192 shall be deductible under 194J at what, 10%. How can there be a remuneration to a director which is not deductible under 192? Remuneration is for work, for services rendered. So normally there should not be remuneration for no work. Maybe that the director doesn't work and we want him not to work, and therefore we pay him remuneration also. He may be an investor. Now it's very difficult to imagine that something will not fall under 192. But what they probably were targeting is sitting fees. They probably did not want to say it in such simple language that people will understand. And they wanted to keep its scope ever as wide as possible, so they can cover anything that is made as a payment to a director, lest assessees will find a new method of taking off this 2,500 or 10,000 rupee sitting fee or 1 lakh sitting fee without tax deduction. Managerial remuneration will be more often than not, it will be there. Very rare that there will be no employer-employee relationship. So commission, yes, there is a possibility that there may be no employer-employee. Then they could have said it straight. Why get into all this? Well, anyway, at least they recognize directors as professional service. That much we will feel happy. There is also a requirement to deduct tax under a new section called 194LAA. 194LAA would say that in respect of transactions in immovable property, tax should be deducted at source at 1%. If the property is situated in one of the bigger towns or cities, then it is the value of the property must be 50 lakh or more. If it is in what I call Tier B, smaller towns or cities, then it is 20 lakh. Because there is a list for which are the bigger cities, etc. So TDS on immovable property, that is again very interesting, where they have made a provision for TDS, 1% of the value of the transaction. Value of transaction will be the value stated in the document or the guideline value, whichever is higher. The obligation to ensure deduction is on the registering authority. Right. The sub-registrar has to ensure that you deduct and remit it into government account before registering the document. Now that poor fellow is a state government employee. Poor fellow is a state government employee sitting and operating under the state law. Now under a central law it says, notwithstanding anything contained in any law for the time being in force, the state registering authority shall. So he has to ensure compliance, and it says that the person deducting need not obtain a tax deduction account number. Right? Then it does not say anything about not filing a return. So, which means to my understanding, those returns, quarterly returns, annual return, whatever return has to be filed. Incidentally, when I am talking of return, I must also mention that the penalty for failure to file a TDS return or TCS return has been brought down substantially. Maximum penalty can be 1 lakh, minimum is 10,000. So, no more per day penalty. It used to be 200 rupees for every day of default. But that penalty is now called a fee. So there are now two things. One is a fee for failure to file the TDS or TCS return, which is 200 per day. The other is a penalty for failure to furnish the TDS or TCS return, which is of course brought down probably. But of course it may be higher than the older amount. That's an independent issue. So this fee will not exceed the tax deductible or collectible is also what they provide. So once they make it from a penalty to a fee, it automatically would mean that they will not issue you a show cause notice. You cannot show reasonable costs, nothing. It is straight away like your interest working. It will run on a daily basis. Right? This is like our ROC stuff. This month you file this much fee. Next month you file this much fee. Over. It will work on that scheme probably. Sorry? Which TDS? Which is coming? If you file annual return, is it coming? Very more often than not, no. That's all. If you file return or don't file return, invariably the NSCL side does not show the TDS correctly. More often than not, the assessing officer passes an order with the demand only. And then you file a 154 and wait. Wait eternally till he gives you the credit. All. Only thing is, in this case it will not be without being paid into government account. For jewelry, similarly they have a TCS provision. TCS will now be on jewelry and in respect of coal, etc. Jewelry is interesting. If you pay in cash exceeding 2 lakh for jewelry, for gold, they don't say jewelry really. For gold, then there is a TCS of 1%. There is a TCS of 1%. Now again here I am a little only bewildered about the procedure that they will follow. I am bewildered about the procedure that SCs have to follow, because there appears to be no difficulty in saying he must, if I go to a shop and buy jewelry more than 2 lakh, he will collect tax at source of 1%, no issue. Now how will he file his TCS return? He doesn't know my PAN number, he doesn't even know who I am. I will walk into some store, ordinary shop, and buy. How will he know who I am? Am I supposed to carry my election identity card even for buying jewelry? Sorry? That's for more than 5 lakh you give PAN. The credit card, no TCS. Only for cash there is TCS.
They'll ask you for PAN.
Sorry?
They'll ask you for PAN.
They probably have to ask you for PAN, and whatever you give they have to take. What if I have a photocopy of your PAN, give it and walk away? Tomorrow the department will come and ask you, why did you buy jewelry? Where is that? You know how many places you have given photocopies of your PAN card? Are you aware? I don't know how many places I have given. Starting from my SIM card buying to my gas cylinder buying, everybody place has my PAN card. Your PAN card is also like that only. I'll take your PAN and give. We'll see. That me see what will happen to you. Then we will know what it means. Everybody who has not bought gold will have a notice from the department. Everybody who has bought will not have it. Correct? In this, see, if you are talking of a regular transaction, a business entity, etc., where the assessee has to prove the expenditure on the one hand, and also to have the PAN number, it is all right. If he does not give the correct PAN, you can say it is bogus and you will disallow, so out of fear you will take the correct PAN. Now here is a seller of gold. He doesn't need the correct PAN. I am going to give the PAN number of CC1 only. Chennai. Or Chairman Board. Whatever we want, we will give. What do you think the shopkeeper will do? He will note down the PAN and go. If you ask him copy, you give with any photograph, sir. You think the shopkeeper will not sell it to you because he doesn't have to identify the seller tomorrow, buyer tomorrow. If you ask him, you please come and show me whether this fellow came, he says, I don't remember. 1,000 people go to GRT every day. What will you do with all this? I'm not too sure how it can be made workable. That is where your difficulty will come. If you have to prove an expense and the PAN, then it is a possible situation because I will not give the wrong identity of the person, because otherwise then you will disallow the expenditure. But if it is income, what will you do? You will disallow income. You can't do anything. You can't say this is not sales. I will give anybody's PAN and walk away. So please ensure that you don't have your PAN card copy anywhere. Right? Even if your wife is angry with you, you are in trouble. Believe me. Then they have a very interesting amendment. This is something on which I have not been able to comprehend why again. They are saying if there is an amalgamation or a demerger, the capital gains will be exempt from tax, etc., provided certain conditions are satisfied. This has always been there. Now they are amending section 47 and 219AA, the definition of the term demerger, saying that if it is between a holding and a subsidiary, then you need not allot shares in yourself to yourself with effect from 1/4/2013.